Yeah, I want to give a little bit more common sense to investing in general, and this really comes from Sam Zell. I call it Sam Zell's Words of Wisdom. He was actually located down here in Florida for a while, in the Orlando area. They used to call him the grave dancer. Reason being, he would buy companies that were distressed and they had bad balance sheets, but he would go ahead and realize that they're really solid companies underneath, and he'd buy them up cheap and fix the problems that were with them. A lot of times you can look to, I guess it's the bottleneck type thing sometimes you want to look at too. What is causing the holdup? In simple terms, a lot of times that works. What is actually the holdup? What is the bottleneck? And he would straighten out what's wrong in the company and sell it, and for very good profit. So they called him the grave dancer. He would dance on the graves of dead companies, and they'd rise up from the dead, and he'd sell them at a nice profit. So that was Sam Zell. He's a multi-billionaire. He actually bought the Chicago Tribune. He's not in Florida anymore. He was in Florida many years ago, and he's up in the Chicago area. So I'm going to tell you this too before I even get into this. People will have a lot of wealth. God, they worry more than the average person is about this silver. They are. They worry all the time, and they can be very emotional too. And that's something you got to watch for. But well, I've been around those kind of people a lot, so But I do know this. I mean, if I'm going to put this out here before I even get into these tidbits, because they're very important things. What I'm going to say here. This is Sam Zell's words, basically. But they're very common sense, and you should pay very strict attention to them. But you don't want to be overly emotionally attached to any investment, too. And it's not easy once you get a lot of money to hold it. I think Jim Rogers says that. I mean, these guys live for the game. I mean, they're like that. They live for the game. I mean, they're into it. It's like if you're not into this shit, it's the way it is. But it goes on. For number one is a very simple one. When everybody is going right, look left. That can almost apply to if you're looking back at what happened with silver. Basically in the summertime, everybody was thinking it's going down at $18, $15. And then all of a sudden it shot up to like 35 or whatever the hell it was, right? And then everybody expected when QE was finally like really here that it was going to go past 35 to 40. I kind of expected a pullback, but I didn't buy it at the right spot. I got it at like 33. I bought online silver. I mean, I'm not buying any more physical stuff. But I bought some online silver because I figured maybe I'll just dump that in 2013 or whatever. And so everybody was expecting, to go once QE was here, it's going to keep going. They're all talking. So when everybody's going right, look left. Now, right now, I mean, maybe people are starting to think 26 is the deal. Now, I don't know this, but you can almost apply this same simple principle. It seems to work, and everybody's expecting something to happen. The opposite happens. And that almost seems like really happens more with silver a lot than anything. But it happens with, commodities, agricultural commodities too. And number two, operate on a condition of no surprises. Now that's linked with holding fiat cash. You don't want to go too much into one area. This is where I was criticizing like the people that are pushing silver, like they're telling you have to have all your money in silver. And I know Raw Dogs criticizes this. That's why I'm on his side for that. I think he's got a very good point on that. I'm going to state that. I know he gets emotional. Everybody's getting emotional. But you don't want to be 100% into anything. That's stupid. I don't know what the hell to tell you. Well, let me put it this way. If you knew something was going to go up, and it was the best investment in the world, and it was going to go up, you should go 100% into it. But who the hell knows that for real? Really, who does know that? I mean, if I went ahead and I knew exactly what was going on in the markets, I knew what time to go into like agricultural commodities, and what time to get into gold, what time to get into oil, what time to get into the S&P, what time to short the market. If I knew that, I mean, I could start out with a few $100 and be, have hundreds of millions inside of a year. So quite obviously, you would not even be wasting your breath talking to other people if you knew that type of stuff. That's one other thing. That's quite obvious. But what Sam Zell says here is correct. These are common sense things. And I just want to point out it's a lot tougher to manage money once you have it. And you got too many friends that think they're not your friends. But you know, people that have money, they live for the game. They live for this shit. That's their whole game. They're addicted to it. They're addicted to it like somebody plays a video game. And I could say I was pretty much addicted to being an accountant for these guys. I loved it. I'd work 60, 70 hours a week, and I'd come up with a lot of novel things. And it was like, come hell or high water, the mission gets accomplished no matter what. No matter what had to be done. And that includes throwing curveballs back at the other guys. Every day, this is another important one, every day you should be not looking to sell an asset in your portfolio. You should be choosing to buy it. Common sense, right? You know, it's like I'm not too keen on even buying physical silver at $30 or $30-something. To tell you the truth, it's probably about right. Would I buy it at $50-something? Definitely not. I don't give a damn what the people would be telling. Maybe it's going to go up more, but I wouldn't. I'd probably I'd definitely be selling electronic accounts at $50. There's no doubt about it. That's me. I know, thumbs down, but I'm telling you the truth about this, you know. The reason some people do make money is because most other people make mistakes. And they make mistakes because they get over emotional too. So, now this was Sam Zell's main trademark. Look for good companies with bad balance sheets. That's why they call them the grave dancer. He used to dance on the graves of dead companies and make them rise from the dead and sell them at a very high profit. Operate on a condition of no surprises. In other words, you don't want to have it set in your head that something's going to be at such and such price by this time, and it has to be there or else you're sunk. You don't want to play that kind of game. You want to be prepared for any kind of contingency that comes up. So like when you buy silver, you know, it's more of a long-term hold for one. And I also have electronic accounts. I don't have all silver electronic accounts though. But they're shorter-term holds. I'll get rid of them. So you don't want to have, you know, depend on something like it has to happen. And I think that's where I get mad at some of the people telling everybody to dump all their fiat dollars into silver because they're backing you into a corner. You know, you can get screwed that way, and you might have to liquidate your silver because of an emergency. That's why you don't want to be too much into anything, even no matter how good it looks. No matter how good it looks. And if you do know the markets that well, you should be a multi-billionaire hedge fund manager. There's no doubt about it. Liquidity equals value. Now, it's nothing more liquid than fiat toilet paper cash. So, you know, that's one thing it's got going for it, you know. Somebody threw me a bunch of cash, I'd be like, yeah, thank you. You know what I'm saying? Liquidity does equal value. So, I mean, anything that's more... that's the one thing I liked about the precious metals, though, and say real estate or farmland. Precious metals are a hell of a lot more liquid than real estate or farmland. The only problem is they don't, like... you can't say gold grows something out of the ground. You know, it's not going to do that. It's not going to produce something. You know, that's the one problem with it. But it is a hell of a lot more liquid, so that's one good advantage. But, you know, these types of things are very important. They're simple. They're very important. You know, this is another guy you probably never... he doesn't get on the YouTube and talk. I'm putting his name out there, Sam Zell. You know, some people hate him, some people love him. I never met him. I know a guy that worked for him for a while. Yeah, he was a shrewd guy. I mean, you know, Sam Zell, very shrewd guy. So, the definition of a true partner is somebody that shares your risk. We got a lot of YouTube people that are partners in sharing silver risk, and they all have their opinions out there. But I try to keep a balance on things, and you know, I think you know, I'm going to state, you know, the fiat dollar does look like pretty crappy. I mean, the world's not going to cave right away, but the fiat dollar is a pretty crappy... you don't want to have stuff all your money in a mattress like they did back in the Depression times. That would not be a smart move today, even though the metals got hit and all this kind of crap. I don't know. You know, My gut reaction is that they're going to bounce after the election. But anyway, here's number one probably. Sentimentality of an investment leads to lack of discipline. And I like silver and gold too. I've always kind of been in that camp. I just kind of like it. I'm probably going to hold the crap after it crashes. I'm probably going to be holding a good part of it even after it crashes some year, after it goes up to its height years from now and crashes. Because I like this stuff because I'm stupid. But, I think pretty much a lot of people are like that. And it's like they'll be afraid to part for it. And, this is where a lot of people will really, some people will say, what are you going to do? Trade it for fiat? God. Well, you know what? There's going to be some type of medium of exchange out there that's going to be the grease that runs the economic wheels. And at one point in time, it's going to be a sell. As in anything, like I said, anybody that's in business does not really run off of mostly cash. They're invested in assets. So you're just going to go into something else. I don't know what that something else would be at right now because I think silver has a lot more room to run on the uptrend. So it's going to be a while. Look for opportunities in markets with pent-up demand. So in the future, that's going to be something you're going to be looking at very carefully. It might be along the green revolution with energy, that type of stuff. I don't know. I mean, it may be. It could be a lot of different things. It could very well be what Jim Rogers flat out states about agriculture. Because agriculture is not only food, it's also fuel. It's also medicine. It's like a little stylish. It's like today. It's almost like the farmers look down upon, but actually the farmers really is the backbone. It was the backbone of the nation when it was formed. And even in Rome, when Rome was formed, and the Roman Republic was formed, it was the citizen soldier, it was the farmer, the independent farmer that formed the republic. That was the backbone of our nation too. So maybe these opportunities in markets with pent-up demand is going to be agriculture. I think Jim Rogers is right about that because everybody wants to be like a jet-set person who walks around in a suit that has an iPod and just knows everything. They don't want to roll up their sleeves. It could be that. It could also be the blue-collar worker is going to be worth a hell of a lot more, too. The guy that fixes the farm tractors, And then understand the downside. Now, this is one that could be emotional, but I'm going to say this. There's going to be a downside to silver, and it's just like this. In all the mining industry, they have this big fear of price going up too fast where it shuts down the mine, basically. And you always have these cycles in commodities. It's just like 101 economics, basically. You have these bull runs in commodities. And then everybody's out there trying to get a mine going or get an oil well going and all this kind of garbage because the price is way up there. And you're even seeing this recently with natural gas. It's, God, the price dropped like a stone, right? But when all of a sudden the price just goes up too high, the demand goes down. There's always ways to either do without something or ways to use a hell of a lot less of it. I'll give a dumb example, but say for instance the environmental regulations have stopped people from using chrome plating parts on cars and motorcycles and stuff, so they got spray-on chrome, right? I mean, they could do this probably. I think it was one of the subscribers I had pointed this out. They can even use like a spray-on alloy of silver to replace silver wire in some instances, or something like that. But there's ways around it. When the price gets too high, that's what happens. That's what happens. It's like the demand goes down, and silver has a tendency to fall off the side of a cliff. So, me not knowing when this is exactly going to happen, I always say, if you get a double on something, sell some. That's a David Morgan advice, too. He'll say sell half. I mean, I don't know. Maybe I'm too bullish on it. I'll say sell some. But I think he's giving you a straight scoop on that garbage. That's legit advice. It all comes down to, on the bottom here, Economics 101, supply and demand. And then, you got a lot of people out there overly emotionally attached to silver, and they're going to tell you that The demand is always going to be there no matter what, and all this. You know what? They can't envision. They can't envision. What could possibly come up with science and how things can change. If silver went up 10 times and the rest of the commodities went up twice, there would be ways to do without less silver. I don't know. People don't want to hear this, but I guess if they don't want to hear it, they're going to get screwed. But like looking at this, Sam Zell's words of wisdom, it's a little bit different. You might not hear about him much because he doesn't go on YouTube. You'll see Jim Rogers, you'll see George Soros even talk somewhat about the euro and stuff, and you'll see Mark Farber talk and different things. Sam Zell isn't really too public, but I thought of him because I knew about some stuff about the guy when he was in Florida. So, but I'm going to say this though: these people, that have a lot of money, they basically live for the game, but they're not totally, all about money. They're not totally all about money, but that's pretty much their main emphasis. I could tell you that right now. So most people just don't have that mentality to do it. So, and you wouldn't want to do it because you're caught in a trap. It's like probably tougher to hold a lot of money than it is actually to make the money. Because once you get to the top of the mountain, the competition changes. It's a lot tougher. So, guess overall, I just don't want to be overly attached to your investment or overly emotional on your investment too. Right now, just hold on. I mean, you don't need to stack the heck out of everything. But if you want to do that, go right ahead. I mean, I'm not saying not to do it, but I don't know. I don't think it's necessary. I mean, once you got a whole pile of silver, what the hell you want to do after that? So, anyway, these are Sam Zell's words of wisdom. Something you don't normally hear. He doesn't state them, but he actually has these printed on his website. And he made a lot of money. He made a lot of money. He had a lot of money, and he made a hell of a lot more money. So he's giving you some good advice here. And, take heed. It's good. Common sense.